This episode is brought to you by FairDesk, a crypto derivatives trading platform founded by 6 former Binance execs and 3 former Morgan Stanley architects. FairDesk is a company focused on building a platform that enables traders to profit from both rising and falling markets. Sign up today and CB will credit you up to $600 in trading funds. For more information, visit fairdesk.com, link in the description below.
I have basically a small chance that we hit 28 and change, which would be this underbelly of all this consolidation. Whether it's 25.5 or 28.5 or somewhere in there, I do think that there's another leg down on crypto. Chances are, and again, notice how when the stock market bottoms, the NASDAQ bottoms, that's when crypto bottoms. What that tells me is that if we're going to see another flush down on the stock market, chances are it's going to coincide with another leg lower in crypto. I still have it priced in to go to 12 to 13,000. A little bit more upside in crypto, but then we're going down again. It's way too easy. I mean, think about this. The markets never make it easy for investors, and bottoming out at the 2017 highs here, way too easy, way too obvious.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. To start off with you, Gareth, let's talk about your website. You've got a couple of them, but this is the verifiedinvestingcrypto.com. Tell us a little bit about that. I mean, you've explained it on our channel before, but just kind of give us a rundown on this service and website you're offering here.
Yeah, so basically what we have is a website where I give out trade signals on cryptos, and the track record is posted on the homepage so everyone can see it. And you can even see I took one big loss. I got nailed on Terra Luna.
Of course.
But aside from that, it's a lot of green and we've made a lot of money. And it just shows you that no trader's perfect, but it's consistency. It's hitting singles and doubles that really make it everything it is. And that's how you make big money in the market. And then, you know, basically every day I do a video, right? So a video usually 10, 20 minutes in length. I go over, I'm pure technical, right? So everything about charts, I keep everything else out. Human psychology comes into it as well, which comes through the charts. And the idea here is that no one wants to get whipped by all the influencers that are calling for $1 million on Bitcoin and get you long at 69,000 when you shouldn't be.
Right.
So if you follow the charts, it's the purest form of everything, right? And it keeps you kind of grounded, I think, in terms of when you should buy and when you should sell. So that's that. And then recently I launched an educational product called the Winning Trader Series. I literally poured my heart and soul into it. It's 20 hours of hardcore education. Everything I know is in these courses. Every secret I know, every technique, every kind of mental psychology, and it's cool stuff. You know, it's a way to help people elevate their game to where they can start being profitable.
Now, let me ask you, because I'm a trader myself, right? And I always wonder, other successful traders, why do you give up the secret sauce? Because ultimately, the markets are almost zero sum, some may say.
Yeah.
That's a huge debate, whether or not the markets are zero sum.
Right.
If you want to explain that, maybe you could to some that may not know, but giving up the secret sauce kind of gives away your alpha, right? Your competitive edge, or no? How do you feel about that?
Yeah, so you're right. So it is somewhat of a zero-sum game. Someone has to sell you the crypto when you're buying it. So they're not going to participate if it goes up. If it goes down, then they made the right decision. You're losing money. So it is kind of a zero-sum game in that respect. In regards to the secret sauce, like, this is the beauty of it. And this is what I've discovered is you can give out this, and like people that are dedicated, that are willing to put in time and effort, they will take it and they will learn and they will become the elite traders and investors in the world. But there's not that many people that will, because people don't want to put in hard work. And I always say, you want to be a brain surgeon, make $500,000 a year, $1 million, whatever it is, you have to go to school for years. I mean, years, and invest so much money in your education. So people, for some reason in trading, people are like, oh, I don't want to do that. I don't want to commit myself. I'm just going to try to do it myself. And then they ultimately lose money. So even though I'm giving my secret sauce up, what I'm very aware of is that there's only about 0.1% of the investing public that will actually spend the time to learn it. And those are the people that will be profitable. And if you only have a small amount, it's never going to influence your secret sauce into not working. right? Now, if everyone did, like if I gave it out for free, yes, eventually it wouldn't work anymore. But know me, you know how it is, right? There's a certain amount of people that have that dedication and that willpower, and then a lot of people just don't.
Right. No, that's true. I always wanted to ask another trader how they felt about that, because I'm launching a service August 15th, my trading signal. Yeah. So starting with Bitcoin versus USD and Ethereum versus USD, and it's a system I've been using for many years that I coded myself, and I'm running it on a trading view. So I just always thought about that. I'm gonna try to keep it limited though, because I'm always scared of too many people getting a hold of it. But what you're doing though is more so educational, and people can run with it and mold it and make it into what they, because the trading style has to fit your personality. Right. That's the key thing. So do you give people various trading styles, or do you just give them like the basics and then they can mold and create their own?
And I think that's important, is like everyone will find little techniques that work for them, and then other things that don't. I do think that the mental discipline is important for everyone, right? I mean, a trader, as a profitable trader, if you don't have discipline, you're not going to make it, right? So discipline, and then you have to understand human psychology about how the market works, right? The market is made up of buyers and sellers, greed and fear. And if you can start to step back and not get caught up in that, but then read the greed and fear, you can actually use it as a contrarian indicator to make quite a bit of money. And then lastly, to me, it's like, I mean, even I run the service that I run, giving out trade signals. We have about 4,000 members, and still in this scheme of the world, it is so minute that it's like, it's not even that big of a deal, right? But there's 4,000 people that follow me, and that's awesome. And I love that they're willing to kind of put aside the crap. Maybe they got burned. A lot of them got burned on the 69,000 high, buying the highs. But now they've said, listen, that didn't work. So now I've got to find something that works better. And I just hope that, if there's one thing, right, when I'm on my deathbed at some point and I've made my 20 million, my 100 million, whatever it may be, I hope I can look back and say, you know what, at least people were able to benefit in other ways from me instead of me just banking money after money.
Right. Absolutely, man. Absolutely. So guys, listen, this video is not about, trying to sell Gareth's a service at all. This is a kick in the session. We just talk, okay?
Yeah.
I do want to talk to you about some economic things, some economic data. We got to look at your Bitcoin future analysis and where you think that's going. I want to start though. Let's go ahead and start with the macro TradFi news stocks. Are you surprised? I want to get your analysis on this. Are you surprised at this rally, this relief rally, I'm calling it, that we're seeing in both equities and Bitcoin and cryptos? Because the news coming out from the Federal Reserve and the data that we're getting is not really conducive to a great economy or a great stock market or any risk on asset. You would think that would mean the numbers we've been getting out, CPI, all those CPE, you would think that means more hikes to come from the Federal Reserve. Kind of give us your take on your macro TradFi analysis.
Yeah, so I think the key is to understand. So number one, you're right. I mean, look at the NASDAQ chart. It's just been, especially recently, it's just off to the races. Now I am watching this trend line, right? Look at that trend line coming down. So that I'm anticipating is being significant resistance. That's around the 324.5 level on the QQQ. But basically, it's so weird, right? Because a lot of investors are like puzzled, like, wait a minute, two GDP numbers that were negative, we're in a recession kind of thing. Why is this market ripping? And the answer is, you can really find it in things like the DXY, right? I mean, the DXY, as soon as we topped and started to pull back, the market started to love a weaker dollar. And one of the things you can note is that almost every company coming out is like IBM reported earnings, and they're like, oh, our earnings were pretty good, but we took a $3 billion hit on currencies. And remember, these companies sell overseas. And so when they sell in yen and they convert it back to dollar, if the dollar has rallied against the yen, they're getting less money when they convert it into dollars. So it really does hurt. And also the strong dollar was telling us that there's fear. A weaker dollar says people they don't feel like they have to hold dollars to be safe. So that means money's going to go into risk assets like the tech stocks, even Bitcoin to some extent. So I really follow the dollar very, very closely to see kind of, well, what the market is likely to do. And one of the reasons I liked a buy on the market recently was we topped out on the DXY here, the dollar chart. If we look at this upsloping trend line, flat pivot line, look at what it was right there, and the dollar pulled right back. So that kind of gave us a basis for the markets getting a rally. Now, I think you're getting into this point, and we saw this. I don't know if did you guys see this stock yesterday, HDK? What's it? It might have been HKD here. But basically, let me bring that up again here. But HKD is basically the new meme stock, and it went from like $10 to 2,500 in a matter of like a day.
Oh, so this is what CNBC has on the front cover of their website. They're talking about. Okay, not familiar with it. So what's going on behind this stock here, Gary?
So this is like I think it's a Singapore or I'm not sure where the company's based. They only have $25 million in revenue, but as of yesterday, the market cap was bigger than Costco, right? So there's no rhyme or reason, but what this is, as a trader, as an investor, what this is telling you is that the market is now in risk on. People are willing to take all these crazy risks again. And here's another one, this AMTD, which is kind of affiliated with that same one. But basically, it's risk on.
Which, well, that's a nice gap up there.
Yeah, I mean,
that's got to be filled.
Oh, yeah, this thing will eventually come down, but could it rally back up? I mean, it's crazy when you're talking about, but this is exactly what happened with GameStop, with AMC, this is basically now repeating. And what this tells you is that small money, retail flows are willing to buy anything again, at least in this near-term period. Now, for me, I'm a contrarian. I look at that and I say, okay, if that's happening, there's no way the stock market is at its lows yet. We have to go down. We have to flush out this insane money. And so I'm actually starting to pick a few little titty-bitty shorts here. Like Apple's, look at the move on Apple here and look at all the resistance lines up here. This is looking really good to me as a potential short. So again, so much just intrigue, but investors have to look at this and say to themselves, it's not just the economics that drive the market. There's other factors involved. The dollar, the 10-year yield, sentiment. Sentiment is the biggest driver. So when you see these meme stocks starting to run again, what it's telling you is sentiment is getting very bullish. It's luring in this money that's been on the sidelines. And now, again, it's rushing in. It will end, and you'll see another leg lower.
I agree with you. This is the only scenario, that the other scenario that I'm questioning, and I'm wondering if this may be the case. I'm wondering if the markets are calling the Fed bluff. I'm wondering if the markets are saying they won't be able to continue the interest rate hikes, maybe one more. Right. If that's the case, if they're believing there's maybe only one more hike or two more, could the markets possibly be pricing in a stop in interest rate hikes?
Right. Yeah, I absolutely think that. So I think the fact that this rally really started with the Fed statement where Powell definitely said, hey, listen, we're watching what the economic signals are telling us. He kind of gave a little bit more of a dovish tilt to that. And then you had the GDP number the day afterwards, which showed us a negative GDP number and potential recession. And the market's saying, all right, if we're going into recession, the Fed is done. They're not raising anymore. And that means, again, lower interest rates, risk on. Maybe the Fed comes out and has to print again at some point in the future. Now, I think it's a little preliminary to think that the printing presses will start again.
Right. But even a pause, though, Gareth, right? A pause, to me, it's overly bullish, right?
A pause is a win for the markets. There's no doubt about it. You had people pricing in another 2-3 full basis points or full percentage points in hiking. And now it's like, maybe they do half a point in or half a percentage point in September, but then that's probably it if the economy still stutters.
Well, the great thing about you and we're technical traders for the most part. I look at fundamentals. I have to use that as part of my thesis, but that means that we don't have to guess. Right. We just let the markets tell us which way it's going to go, and we'll react to that. How do you feel about two things kind of leading into the crypto markets? What is your take on the crypto markets where we are? We saw 17.5-ish as a low. How do you feel about it? I'm seeing a lot of bullish fundamental points coming out. One being inflows are increasing. There was another Tether printing is up. It's been down for the last 3 months. Now they're starting to print that coin USDT. So that could be potentially another leg up in the markets as people use that Tether to buy cryptos. Give us your assessment of cryptocurrencies and where we go from here.
Yeah, so I mean, very clearly we have Bitcoin in a tight channel here. I actually think that this is a short-term bullish pattern here, so I do think we're going to head up. At minimum, I have us hitting 25.5, which is the pivot low from the Terra Luna collapse right over here. But again, once we get up there, the market's on borrowed time. I have basically a small chance that we hit 28 and change, which would be this underbelly of all this consolidation. But you know, whether it's 25.5 or 28.5 or somewhere in there, I do think that there's another leg down on crypto. Chances are, and again, notice how when the stock market bottoms, the NASDAQ bottoms, that's when crypto bottoms. So what that tells me is that if we're going to see another flush down on the stock market, chances are it's going to coincide with another leg lower in crypto. I still have it priced in to go to 12 to 13,000. So I think, again, short term, I am bullish. I'm actually long Bitcoin. I'm still long here. I've been long all the way around in this point. I was long Ethereum. I was long Solana, Avalanche. I took profits on those just to protect myself in case we start to see the dump sooner than I think it's going to happen. But I still am long Bitcoin. I have a little bit of Polkadot, a little bit of Cardano actually as well. So again, a little bit more upside in crypto, but then we're going down again. It's way too easy. I mean, think about this. The markets never make it easy for investors, and bottoming out at the 2017 highs here, way too easy, way too obvious, and the market never wants to do that.
Yeah. I want to get your take on this. Is more fundamental, but there could be some ramifications from this, or this could be like reading the tea leaves on the direction we're going in the markets, cryptos that is. How do you feel about, first, I want to talk about how do you feel about Tesla selling their Bitcoin at a profit of $64 million. I think they sold 75% of their stash there. What does that tell you? What indication is that to you, if any?
Well, when I see stuff like that, it definitely makes me feel better about a potential bottom in Bitcoin. I think what you're going to need to see is you're going to need to see before an actual bottom is in there. You have to see Michael Saylor really get squeezed. And I think he just stepped down as the CEO.
That was the next, that was the next topic. Yep.
Yeah. So I
wanted to know.
I think that's the beginning of it, but I would want to see Bitcoin get to the point where they maybe get margin called on some of the debt that they leveraged to buy Bitcoin. And that would be something, the market's bottom on absolute panic, and that would definitely be a panic situation if you had all of their Bitcoin potentially getting dumped on the market. So, I mean, I think that, again, you have to think Tesla. I think it's been unpopular. I think Elon Musk just kind of said, all right, I don't even care. Let's just get rid of it. It's only $1 billion worth or whatever it is he has. But I think Michael Saylor and some of these other players, when you get them squeezed, that's a bottom.
Michael Saylor stepping down as CEO. I thought this was more than what the headlines really captured, in my opinion. Me being, I'm a former C-suite individual for a company. When a CEO steps down and moves into another position, this is window dressing. I mean, I think the board is starting to get a little upset with Mr. Michael Saylor.
Yeah.
What's to come after this? Like, this is the first thing we're hearing. Are they going to be selling next? Do you think that is the next move to get him out the way and then make the decision to maybe unload some of their losses at these levels? What's your take on that? It kind of goes into what you were saying earlier about MicroStrategy.
Yeah, so I definitely think that is a possibility of what's going to happen. They may want to reduce the positions in Bitcoin a little bit because, again, the company and the board of directors are saying, hey, listen, we are so leveraged. And like maybe when it was at 65,000, it seemed like a crazy thought that we could go down to 20 or 15 or 10. But now that you've already touched 17.5, who's to say you don't go to 10 or even 5? And I think the board of directors is saying, hey, listen, this could bankrupt the company. This could be the undoing of a great company that's been around for a long, long time. And I think they have to act, remember, they have that fiduciary responsibility to shareholders.
Correct.
And if there's a big risk of that, then they have to at least lighten the amount of Bitcoin that they own to put it in alignment where they can hold that Bitcoin and not worry about a margin call.
Yeah. How do you say that again?
Isn't it just crazy how things turn? I mean, here you had Michael Saylor was at the top of he was riding high when it was 65, 69. And I mean, it just shows you how unforgiving the market is. And this is a lesson. I mean, people say, why are you so humble, or why, there's so many people that have made money in the markets and they're so cocky and they're such douchebags.
No.
And it's just like, I've been humbled so many times, and I'll be humbled so many more, that there's no way I ever get cocky about anything, because the market, the second I do, the market slams me.
I've been always poking fun at Michael Saylor. Smart guy. I watched the 5-hour Lex Friedman interviews. The guy is very smart, okay? But he's also very cocky, and very cocky being that he's new to cryptos.
Yep.
You can read a chart and say, oh yeah, I saw it go up there and it, made an 80% correction here in the past. But if you weren't there to witness it, you don't have that burned imprint in your mind of how much it hurt you, right, Gareth? Yeah. So you don't appreciate those moves down, and you're not as risk averse as you would be if you were actually gone through it. I always poke fun at him. I have this on my chart that and that is the Michael Saylor line. I call it the Saylor line. That yellow one there is the $21,000. I was just making fun at him as far as the potential margin call there, but that didn't happen. I didn't hear any news about a margin call at 21,000. I think at our last interview we talked about that being a potential.
I think they were able to maneuver, and then he came out and said, oh, it's not till like 13,000 or whatever it was.
Right.
I don't remember the number, but it's just so crazy. And this is one of the reasons why, and this comes from me growing up and as a beginning trader. I mean, I'm blowing up my account so many times as I was in the process of learning how to read charts properly. It's like when I buy stuff now, I like to buy it in cash or pay it off really, really quickly, because once I own it flat out and there's no monthly payment, I know I keep my monthly expenses low. And you just don't know what the market, I mean, even at the stage I am in my career, you still have to act on the side of caution and be cautious, because the market can do something in a split second and your fortunes can change. In fact, there's a great book. I don't know if you've ever read the Jesse Livermore, the Jesse Livermore story.
No.
But he was a trader in the 20s, and he literally made he made billions of dollars back then, which was trillions these days. But he ultimately blew himself up multiple times. And even during the Great Depression, the government came to him and begged him to cover his shorts because the economy was crashing. It was the Great Depression, right? And they literally were begging him, please do this, and he did. But he made so much money, the equivalent of being bigger than Elon Musk today. You know what happened in the end? He ended up making bets, didn't have risk management. He blew himself up and committed suicide at the end of his life. I mean, incredible story if people want to read about how in risk management is so important.
That's the number one rule for me.
Yeah.
You can have a winning strategy, but the wrong risk management strategy attached to that and blow yourself out.
Yeah.
That's
right.
So how do you feel about MicroStrategy stock as far as it's been on a rally lately? Are you paying attention to that? How do you feel? Do you think it's just part of the macro move up, the relief rally we're seeing? I think it's up over 60%.
That's what I think it is. I think you have a lot of people that think Bitcoin has bottomed, and so they're willing to run back in here.
Right.
For me, I just look at resistance, and this is kind of crazy, but just take this low right here and then look at what today's high is. I mean, to me, that's be careful. I wouldn't be buying it today, put it to you that way.
Right.
I'm not sure if I have the guts to short this, because if Bitcoin jumps overnight, this gaps up and such. Sure. But it certainly wouldn't be a buyer here with it up into resistance right here.
Wow, man. Great analysis. Anything that we left out today that you want to maybe touch on?
I think just investors, I've been through many bear markets in my life, and the one thing I've learned is that bear markets will last for a certain amount of time, couple years usually. If you look at 2007, and then it bottomed in 2009 type thing, that was the last big one. But just be aware that in bear markets, the market will fool you with these amazing rallies and make you think it's game on again. And you just have to be really cautious. So I've been going long stocks, but then I don't stick around too long. I make 10% or whatever it is, and I just say thank you very much. And ultimately, to me, when I look at things and I look at what the Fed is doing, and the Fed is handicapped here, right? With inflation where it is, even if we go into a recession, they cannot print us out of that recession, at least until we get back to close to 2% on a 2% inflation. And so that's a huge warning sign, because we've had so many mini recessions in the past 20 years, and the Fed's always been there to kind of gently lift us up, give us kisses, all that stuff. And they can't do that. So it's like you basically, the Fed, we're like the Fed's kids, and they just kicked us out of the house, and we're on our own. And the market has to recognize that, which means we have to be extra careful in this environment. So if anything out there, get educated, learn during this period, and be careful.
Yeah, and you talked about the span of 20-something years here. So for a change to happen like that, such an instrumental big change to happen, it takes time for the market to digest the reality of that, right? Yep. So you won't see it, as you stated, you'll see these moves up because the market is still thinking the Feds are going to come in and save us.
That's right.
So yeah, it will take some time. I agree with you. What chart do you have up there?
Oh, this is just block. I'm actually in a little bit of a short trade on block right now. I think I'm in the money, but yeah, just amazing run over the last few days here, getting into a lot of resistance right up here. So it's a day trade, but just checking in on it.
Okay, got you. One last thing I wanted to talk to you about. This is more political. Pelosi going over to Taiwan. Bad move in my opinion. I think she's trying to divert the attention away from her husband buying all that Nvidia stock. I was just like, what can I do really quickly to just take everyone's mind off of what my husband did? This is the type of thing here that, as you stated, can in the blink of an eye change the markets. A black swan event, right? Yeah. She could trigger some type of kinetic or even economic monetary war with China by going over here. What's your thoughts on this, and are you keeping this on your radar as a trader?
Yeah, I mean, it's definitely on the radar, but at the same time, I look at price of the markets, and the markets, if this was a risk, smart money would already be unloading, and we wouldn't see the markets rallying. So I kind of look at the market. So we know that the news, whether it's Fox or CNN, they all have their agendas, right? We know that. And so what I do is I really say, okay, well, I know what's going on, but what are the charts doing? And if the charts were selling off, then I'd be like, okay, we better be careful right here, because the smart money's dumping and they think something could happen. The way the markets are acting, it doesn't seem like they care at all, in which case I'm trying not to care as well. Now, if we get the markets to go into resistance where the technicals are telling me to go short, and which they kind of are starting to get there, and this is Apple's chart again, just so many resistance points up here. But then, yes, then I'm kind of looking on the short side, but it wouldn't be relative to that. I think, again, is she trying to divert attention? Maybe, but at the same time, it's almost worse because she's going to one of the major semiconductor production places in the world. I
didn't even think about that.
So it's like, the funny thing is, I saw this joke, the best thing was, it's like, be really scared when her husband starts buying like Raytheon and Halliburton and like all these war stocks.
Right.
And get the hell out,
That's true, man. There you have it.
The bottom line is, the politicians, it's just stupid. Like they should be investing in like ETFs, because at least they're not company specific. And again, no politician's going to listen to me. But if they were smart, they would just avoid all that potential. They know how the internet is with the conspiracy theories. Just avoid it. And obviously they have a right to invest, but they could invest in like an ETF of the S&P, and then it's kind of like, okay, whatever,
Yeah, that's a good point, Gareth. I think that should be the law. Anyone in office should only be able to buy ETFs. That way it's no specific gaining of,
specific companies, right? Where they're making rules specifically. That's no good.
Good point. Well, there you have it, guys. The one and only. I call him Turbo Trader. Gareth Soloway with me again on another Kicking It session. Make sure you guys go follow him on Twitter, Gareth Soloway, and he'll have a link to all of his other great content and services there. All right, it's your boy Crypto Blood. Make sure you guys like, share, and subscribe, and click that bell to receive more videos like this. We out here. Ha!